Hi friends, this is CA Kiran Kumar. In this video, let us discuss about notification number 94 which was published on 22nd December 2020. Let us discuss the main points of this notification one by one. Point number 7. In point number 7 of this notification, in the said rules, Rule 36 sub Rule 4 with effect from 1st January 2021 for the word uploaded at both places where it occurs, the word furnished shall be substituted. Because most of you know that while filing GSTR1, there are three main steps. Number 1, uploading of invoice, and number 2, submission of return, and number 3, filing of the return. So when you upload invoices, there are still chances to the supplier to make changes or to completely delete the invoice as per his wish. So he cannot make any changes if he submit and file the return. Therefore, through this notification, the recipient can claim the input only the supplier uploads and submitted and file the same. Then only the recipient can take the input on the same regarding this notification. And mere uploading won't be sufficient to claim the input by the recipient. And point number C, the figures and the words 10%, the figures and the word 5% shall be substituted. This means the percentage 10% shall be substituted with 5%. As per Rule 36 subsection 4, a taxpayer filing GSTR3B can claim provisional input tax credit only to the extent of 10% eligible credit available in GSTR2A. That is, up to 110% he can claim the input by the taxpayer. Through this notification, it was reduced to 105%. So he can claim only subject to 105% of the input reflected in GSTR2A. Point number 8. In the said rules, Rule 59 after Subrule 4, the following subrule shall be inserted. Namely, notwithstanding anything contained in this rule, a registered person shall not be allowed to furnish the details of outward supplies if goods or services are both under Section 37 in Form GSTR1 if he has not furnished in return in Form GSTR3B for preceding 2 months. It means the taxpayer shall not be allowed to furnish GSTR1 if he has not furnished GSTR3B for preceding 2 months. And the same is applicable for the quarterly taxpayers also. This is for the quarterly taxpayers. It means if the taxpayer is quarterly taxpayer, then he shall not be allowed to file GSTR1 if he has not furnished GSTR3B for the preceding tax period. And important point throughout this notification is point number 9. In point number 9, the said rules after Rules 86A with effect from 1st January 2021, 86B rule was inserted. Let us know what is Rule 86B. Rule 86B is relating to the restriction on use of amount available in the electronic credit ledger. As of now, we are not restricted to utilize any input which is available in electronic credit ledger to pay our output tax liability. That means we can use the 100% input tax credit which is available in electronic credit ledger to pay our tax liability. But through Rule 86B, it is restricted to 99% of our input tax credit ledger. It means you have to pay at least 1% through cash or electronic cash ledger. If net liability exceeds 50 lakhs, subject to some exceptions given in Rule 86B. Let us know in detail about Rule 86B. Rule 86B is inserted to restrict the amount of use available in electronic credit ledger. The registered person shall not use amount available in electronic credit ledger to discharge his liability towards output tax in excess of 99%. Means the maximum limit up to 99% of such tax liability in cases where the value of taxable supplies other than exempt supplies and zero rated supplies in a month exceeds 50 lakhs rupees. Let us see some exceptions given in 86B. The exceptions mentioned as below. The said person or the proprietor or karta or managing director or any of its partners or whole-time directors or members of managing committee of associations or board of directors, as the case may be, have paid more than 1 lakh rupees as income tax under Income Tax Act. Means if a managing director or whole-time directors of a company have paid at least 1 lakh rupees of income tax rupees during the last 2 financial year, then the company is exempted from Rule 86B. So the company can use 100% of electronic credit ledger input. And let us see second exception. The registered person who have received the refund of more than 1 lakh rupees in the preceding financial year on account of unutilized input tax credit, means the person who got refund of more than 1 lakh rupees from the unutilized input tax credit, then he is also exempted. And the most important point number D, the registered person has discharged the liability towards the output tax through electronic cash ledger for an amount which is in excess of 1% of the total tax liability applied cumulatively up to the said month in the current financial year. Means if he has paid at least 1% of tax liability through his electronic cash ledger cumulatively from the starting of the financial year up to the previous tax period, then he is also exempted from Rule 86B. Means he can use 100% input tax credit which is available in electronic credit ledger. Registered person is government department and public sector undertaking, local authority, statutory body. These persons were also exempted from Rule 86B. So they also can use 100% of input tax credit. Point number 10. In the said rules, in Rule 138 in Sub-Rule 10 with effect from 1st January 2021, the letters 100 km was substituted with 200 kilometers. Means this is regarding e-way bill. In e-way bill, for distance up to 100 kilometers and in case other than over-dimensional cargo or multimodal shipment, previously they have given the limit of 100 kilometers. In the for every additional 100 kilometers also one day additional day will be given. Through this notification, they have substituted this 100 km with 200 kilometers. So this is for the day. Thank you very much. For more interesting updates, please subscribe the channel. If you like, please subscribe and say thank you very much.